Hey everyone, welcome back to the show. I'm your host, Ankur Patel. And today with me, I have Doug Robare, who is the Director of Deal Origination and Underwriting at Coverys. Welcome to the show.
Hi, welcome. Thanks for having me.
Of course, excited to have you here. One of the things we love on the Pioneers podcast is really just a walkthrough of your background and origin story more specifically. So, could you maybe take a few minutes just to walk us through how you got to what you're doing today?
Yeah, certainly. So I'm originally from the United States, but this evening I'm at my home in the UK. I've worked in commercial insurance underwriting for the last 27 years, starting my career in the United States, working for companies like AIG. I had the opportunity in working through what was then sort of like finite risk insurance, so dealing with contingent liability buyouts and sort of specialist risks, to move into what was then traditional directors and officers insurance, professional indemnity, commercial crime, etc. From the US, I had the opportunity with my employer to move to Europe, and I moved to Dublin, and I worked in Ireland for 18 months. And then from there to the UK being one of the biggest insurance markets in the world outside of the United States. And in the UK, I've worked on wholesale portfolios in management liability, professional liability arena across both emerging markets, North America, Europe, the UK. And I this was all within the AIG umbrella. I then moved on and worked for Zurich for quite a few years, kind of extending my understanding and knowledge of the products that I was tasked to underwrite, but more in a managerial capacity, and also in relation to understanding the impact of global regulation. So dealing with localization of coverage, so to ensure that executives had the appropriate form of coverage in the different countries in the world in which they worked. Um, I moved on from there, and I've worked at companies like Aviva, and then from Aviva, I then moved to Generali, Assicurazioni Generali, which I actually had the great opportunity to move to Italy and work in the home office in Milan for 3.5 years with them, setting up go-to-market strategies for financial and professional lines, dealing in more than 36 countries and territories, putting in teams, underwriting process, discipline, products, training, all of which didn't exist in a cohesive and consistent manner. Um, and in that time, I had the opportunity to explore expansion of group appetites inside of Lloyd's, which brought me back to move to the UK. Now, whilst we did not enter Lloyd's, nor did I, we went through an extensive process of doing it, and that taught me a lot about the interworkings of that market in particular. That kind of brings me to where I am now. About 5.5 years ago, there was a business that was set up to effectively buy controlling interest in managing general agencies. So these are insurance agents, insure tech companies, wholesale brokers throughout all of Europe. The idea being that we wanted to provide a liquidity event for the particular entrepreneurs who are really good at being entrepreneurs, but generally speaking, they have a challenge with removing critical bottlenecks to facilitate next level growth. And those bottlenecks really relate to things like compliance, underwriting capacity, general and administrative, and then IT infrastructure.
Mm-hmm.
And the IT infrastructure side of things became universally understood as being something that traditional insurance people aren't necessarily good at. But I could say that for a lot of industries. The business that we currently manage operates in 3 different countries. We have people in different offices in other countries as well, but we operate in 3 different countries, and we manage insurance premiums in commercial insurance for more than 300,000 customers spread over those geographies in which we work in. So my whole career has been in insurance underwriting, albeit in different capacities over time. And what I find is that I'm constantly engaged and constantly trying to learn more and more as time goes on, largely because our people, look for vision and they look for
Mhm.
a North Star to guide them. And we try to provide that to them. So it's a bit of a whistle stop tour in relation to my career, but it's 27 years in insurance underwriting.
Sure. Okay.
And I find myself every day waking up and excited about the challenges that lay ahead.
Amazing, Doug. I really appreciate that background, and it's truly global experience. I think working in different geographies, learning the landscape, and navigating the differences that exist. Right. I think insurance is very, very complex when you get under the surface, and I think you've seen that firsthand. I think maybe to open up with the thing that I hear quite often, anecdotally, at least at insurance conferences and such, is that there's a big demographic challenge when it comes to insurance. There are a lot of great people in really great roles today that may very very likely will retire in the next 10 to 20 years, maybe sooner in some cases. So there's a generational talent that is going to soon be out of the insurance industry and off to the sunset in retirement. And there is perhaps maybe more scarcity in terms of new talent that's coming online for one reason or another. And there's this big fear that because once that generational talent leaves, who's going to fill that void, right? I think people have turned to AI as maybe a potential answer, technology as a potential answer. So instead of maybe people, there's maybe operational efficiency. I'm curious if you agree with that view, and if you do, perhaps what do you see? I mean, is there more to that story there?
Yeah, no, I think in reality there is a bit of a delta, but I think that this has also existed throughout my career. As much as I do love insurance, I think it's a dinner party killer when you start talking about exactly what you do for a living, because most people want to talk about things that are entirely not relevant to the particular areas of insurance in which I work. And therefore, when you're talking about, an industry that provides a career path, a solid career path for younger people, it certainly does exist, but it isn't necessarily as well promoted. As a consequence of that, you did have a big divide between sort of the ages. And whilst government, I think, would want us to work until we are at least 75 or 80.
Yeah.
So hopefully I will make it past your 10 to 20 year projection. I do think that it represents a challenge. And what happens is a lot of the nuances that relate to insurable risks only can be learned through sort of experience. And therefore, having a good mixture of staff that's older and younger will enable the next generation to actually embrace this as a career path for them. Now, in relation to AI, I don't necessarily think that per se addresses or solves that particular issue. I think it's coming in irrespective, and therefore there's a huge opportunity for both demographics to actually learn and benefit from it. It will change the shape of insurance, generally speaking. It will change the shape of underwriting. I spoke at a conference around 9 years ago in Singapore where I described the fact that, underwriting as it currently exists will no longer exist when my son is old enough to work in this profession, should he choose to do that. And that's largely because, everything evolves, everything changes. And I think the only thing that we'll start to see is the acceleration of that change throughout professional services. And it's something to be excited about and try to embrace and get ahead of, as opposed to be sort of resistant. And so, I guess in short, yes, there is a demographic difference. There are a lot of
Mhm.
people exiting the marketplace. It does present, though, however, a huge opportunity for younger people coming into the market. Now, hopefully, there's going to be some knowledge sharing along the way. But what will, inevitably enhance their experience and improve the overall risk landscape is technologies like artificial intelligence.
Yeah. Yeah, no, I think that makes sense, Doug. I mean, there are some things that you can't um, close the gap with things like AI, and maybe there are some areas that could. But it is seems like it is a challenge. Of course, I think as you're saying, um, basically people are working until 70, 75, right? And I think that's coming some from the government, some because people just really love what they do and they don't want to leave, and they're able and willing to continue working even after the age where typical and generations prior would have retired, right? And I think that does help.
Well,
Um,
I'll weigh more on the side of the fact that it's government that's actually preventing people from retiring, but that's a separate discussion. But
yeah, yeah. So maybe let's talk about the underwriting process and where you think technology like artificial intelligence could be helpful, right? And maybe to make this a little bit more concrete, we talk about the specifics around the underwriting flow where you have seen technology provide and improve of value, and then areas perhaps where technology maybe the attempt was made, but then the ROI just wasn't quite there. Because I think from technologist's perspective, certainly like multimodal where we work, the challenge always is outside looking in. It feels like there are multiple areas where things could be better, be more efficient. But then when you get down to it, it is pretty challenging waters to go and navigate for one reason or another. But I'm curious, as an insider, what do you see as the areas where potentially there could be opportunities?
yeah, I think that navigating through large insurance companies, brokerage businesses is certainly a challenge. I think largely because there tends to be a siloed mentality between critical functions throughout the organization. But if you look at, purely on what's happened in the last, and my special areas are in commercial insurance. So I'll speak broadly about retail insurance, but I think broadly, I'm more specific related to commercial lines. Um, if you look at things like the in the nascent days of sort of technology being introduced as a facilitator, you've got CRM systems that actually kind of collate and gather information about a client, kind of looking at product density, looking at their average premium spend, their claims history, etc. You get that, you move into then the quote and bind phase, which actually can put together quotations that are much more tailored for individual customers' needs. You move through the entirety of the administrative side. So policy documentation, midterm adjustments, premium collect, those areas where really they kind of fall after the underwriting has occurred, but are are critical because absent all of those things happening, you don't have a policy, you don't have an insurable risk because you haven't collected the premium, you
Mhm.
haven't issued the documents, etc. Then you move into the notifications of loss, claims management, etc. And bringing it all together, I see technology, I've seen attempts at every single level
Yep.
of different vendors coming in and selling particular solutions for a particular need, really not looking at things organically across an organization and saying, okay, well, how do we fix this end to end? And more
Yep.
importantly, that maybe that is even a misnomer saying end to end, because it actually should be one sort of risk ecosystem where you, from origination all the way through to notification of loss back in quote and bind, it
Yeah.
should be this constant cycle of update, where you can get into machine learning in relation to predictive analytics related to doing pricing, et cetera. So vendors have addressed particular areas, and there are very good vendors that do it, but there hasn't been really sort of that entire whole view across the space. I will say though, there are some that have leaned incredibly hard on technology. And if we look at a lot of what's happened in the insurtech space as an example, that's been emerging over the better part of the last decade, what I would say is, what's lost with technologists is, and apologies if this cuts as a comment, but I tend to believe that I like distribution businesses that have technology problems. I don't like technology companies that have distribution problems. So there's a soft skills element that's associated with the sales cycle of being in insurance underwriting, where really, when you look at really very good technology, you're like, that's great, that's practical, it works. But at the same time, you have to have human interaction, you have to deal with a person, you're dealing with an 11th hour policy product that is supposed to respond and respond the way in which the client wants, which inevitably there's disconnects at times. And so that technology side of it, I see them going wrong when they don't address the basics, which is that this is just box standard, a promise to pay. You need to be available, you need to be engaged, and technology doesn't solve all those things. So there's, as I said, there's vendors that have done things in my past that are do things really well. No one's looked at things sort of like as an organic whole holistic view. And then on the flip side, technology companies that are trying to solve a problem that they've deemed an issue. It's been solved technologically, but you still have to be engaged and sell products, and that bridge hasn't been entirely crossed yet.
I love that breakdown. I mean, I think you're right. I think there have been slices that have been tackled by different vendors, and there are many good vendors that tackle different slices. But that holistic view, trying to go and touch more parts of the business from the origination side all the way to the first notice of loss and feeding that back in, as you mentioned. I think tying that piece together and making it more holistic in its approach, I think that's a huge opportunity, right? And that's what really great people do. I think software, I think hasn't been able to tackle. And then the other side is the people side of the problem, right? It's really important to consider that this is ultimately touching individuals, even at businesses, and you have to take that people part of the equation into account, even though it's a software first approach that a lot of vendors take. Do you believe that artificial intelligence and what you've seen on the machine learning side of things, especially with like generative AI, is technology that is mature enough to go tackle the open areas that you've mentioned, or do you? And maybe another way to rephrase it: are you excited and optimistic about what's possible here, or are you still maybe skeptical of what it could accomplish, given the problems that you've stated?
Well, I think that there are two really interesting questions wrapped up into one. So if I'll tackle first about the excitement about it. I think inevitably, whenever you introduce new technologies, there is, I don't want, well, for lack of a better way to put it, there is a buzz about its potential impact for the good. And I do think that there's a lot of redundant processes that actually occur throughout the underwriting cycle, and that LLM can actually help enable to remove some of those bottlenecks. Equally speaking, I think it's a great facilitation tool to go through large data sets to actually enable faster and more precise decision making to occur.
Mm-hmm.
So, from the standpoint of being excited, absolutely. I tend to tell underwriters on a regular basis that if we accept the fact that complexity increases over time and regulatory oversight only gets more and more complex, the people that actually embrace that as part of their process will thrive and, dare I say, survive in the future. And you want to do it in a seamless manner in which the underwriters can still engage with the customers and the brokers directly, um, enabling that soft skills
Mm-hmm.
to actually improve the overall outcomes for the insured. But at the same time, you want behind the scenes to be able to deal with all of those complicated and complex processes over time. And so, yeah, we're very excited about doing it. Now, am I slightly sort of skeptical in a manner? There are areas where I don't think that it's entirely there yet. And I
Mm-hmm.
work in product lines that actually deal with their emotive product lines, some of them, such as
Yep.
directors and officers insurance, where AI bias, hallucinations in the decision making process can actually be, can have some huge ramifications when you're dealing with very senior executives and ensuring them in their operations. So I don't think it's there, but then again, this largely speaking wasn't a thing 5 years ago. So I can only imagine, and with the exponential improvement of technology over time, that you're going to see things drastically improve 1, 3, and 5 years out. So I have my suspicions right now, but they're only because of the experience that we're having today. But I'm very optimistic about the future and the benefits that will be delivered.
It's great to hear that because I think you're right. I think you can't imagine a world where this technology just comes in and changes everything overnight. It's not that simple. There's incredible complexity, especially when you're dealing with brokers and you're relaying into the more nuanced people personnel side of the equation. It's really hard to go and just push technology there. And generally, what underwriters do is pretty complex. Like D&O, as you mentioned, that insurance product, there's a lot of complexity there. And I think where technology can be helpful, at least in its current form, because this is such a mission critical product, is that it could make the lives of the underwriters easier. So it's taking away some of the tasks that they would have to do, and it's doing it for them. It's even providing decision-making support, maybe even some recommendations to go and point them in the right areas pretty quickly. And even if you just do that, that is going to be a huge lift if done well to the underwriters, which are they have high domain expertise. They're highly compensated. They're super important to the nature of the way that business is done in insurance. So I think we see it the same thing. We see it the same way. We hear that from a lot of other people that are in this space right now. But it is really hard. One thing that I've seen, and I'm curious if you see something similar, is it's hard to do proof of concepts and pilots in this space because you hope for really great outcomes, but when you get down to the complexity, you do need to take into account of how do you introduce technology that is going to be additive to what underwriters do without being a tax, right? Because initially, if it doesn't work well, it's yet another thing that the underwriter has to incorporate, not knowing how to incorporate that, and it can actually slow them down in the short term, even if it in the long run could be helpful.
No, yeah, I mean, there is it's endless the amount of things that have been introduced over my career where it was intended to improve ultimately the workflow process for the underwriters under my stay. And inevitably, what ends up happening is people create workarounds because it's a brand new process. Uh, we're creatures of habit. And as a consequence of that, like you get this more complicated process than the that was introduced to start. Now, when you also look at legacy systems and people that are actually putting things on top of one another, I sat in a conference recently and it was it was great. I heard this chap talk about the fact that when he had been around long enough to remember an old system that the company had, all the underwriters complained about it, said it was the worst thing ever. Now, what they did was they actually took everything to heart, what was told to them by people, and through experience in the right vendors, they actually created a brand new system and reintroduced it, getting rid of all of the issues that had been discussed as being problematic. What happened? Immediately upon reintroducing the new system, you had all the underwriters complaining they wanted the old system back. Now, this is the one, of course, that they were complaining about from
Mm-hmm.
day zero. So people are creatures of habit. They create workarounds. And I think that what ends up happening is some of this stuff is just plopped on the lap. And people are told they go to one or two training sessions and they're told to figure it out. Here's a phone number. If you've got an issue, contact a chatbot. And they're left to their own devices. And at the end of the day, many of the products across the insurance space are, this is not we're not in a competitive vacuum. We work in a very, very aggressive and competitive marketplace. And people have to be out there generating new business and new opportunities. So the tools that they have actually have to also embrace the sort of the work ethos of the individuals involved in trying to generate all of this revenue, and they need to be facilitators. So I've seen it go bad, but it doesn't mean that I'm not optimistic about the future. What I do like is some of the startups that don't actually have legacy, and therefore can have it built into their corporate culture from day one. Or, I mean, it's not a culture, but you build it into the business and you create the culture around the way in which you do your workflows, which actually can have some really interesting ways to kind of change the marketplace. So it can be, yeah, the amount of times I've been told, we've got this brand new thing and it's going
Mm-hmm.
to solve all your problems. It's a recipe for, sometimes it's a recipe for disaster, but I
Yeah.
still remain optimistic. So.
Yeah, I think changing process that a lot of really great people have become accustomed to, even if it's not the optimal process, um, sometimes that's really hard to change, and you see resistance to changing that. Even if people disagree that there might be better ways to do it, just because it's hard. I think humans are creatures of habit. If you could go and improve the existing process the way it is, and make it more efficient without them having to kind of relearn new tooling, that would be the most beautiful state, right? Because then all of a sudden they're still doing what they do, but they're able to do it faster. That's sort of been our vision, is go and change keep the process as intact as possible, so it's not going to introduce too much friction and resistance, but just go and speed it up. And you could speed it up in different areas. Sometimes it's document review. At ingestion, you could go and validate and review the documents pretty quickly, plug that in. So now an underwriter that goes to their workbench, they see more of the documents processed, data's present there, directly where they would normally be working out of. So now nothing changes in terms of where they do work, but a lot of that work is now maybe pre-done, pre-filled out. So it's speeding them up 20, 30, 40%. And you do that enough in different parts of the workflow that they touch, that could be really additive, right? That's like one approach to do it. And the other approach, which is maybe gut and replace wholesale what they do, that could also work if designed well. But I think you may encounter more friction, right? And for some organizations, that friction just might be too much to overcome. But I'm curious, based on your experience, where does the journey start? So a company like yours, obviously generative AI is new technology, trying to go and understand what it is, how it could be helpful. Does that start from within? Do you do experiments within? Or do you open it up to external consultants or vendors to go and figure out how to make all of that work?
Yeah, I think well, that's a very interesting question, and it's one that sort of I, that I think about regularly, about how we should, as an organization, do things differently and better. So the company that I currently work for, we are actually investing in these businesses, as I mentioned before.
Mm-hmm.
So some of them have technology and others don't. Where they don't have technology, it's easy to introduce brand new systems because it's it's easy per se, because they don't have anything legacy and you can just introduce it on the trot. With people that already have their own systems, some people are tribal, right? Like they want and love their systems, and therefore they're very difficult to give them up. Now, if I look at over time how business scales in highly commoditized products, some commercial insurance products are very commoditized, especially in more competitive markets. What you look at is, in order to get incremental growth, can you get that growth without having to put a tremendous level of resource by way of headcount against the growth? Um, what technology is out there that actually can facilitate dealing with high volumes of data in quick successive orders,
Mm-hmm.
to free up the individuals that actually work in the business to explore new areas of opportunity to grow. So going hand in hand, which I don't think it necessarily applies to AI, but going with the technology forward. So when I'm thinking about that question from a strategical perspective, I actually think that the only way to do it wouldn't necessarily be, I wouldn't engage in the first instance a consultancy practice, because I think that, like, we already have a fundamental understanding of how the business flow works, and how it could be improved. Um, it's more about choosing the right vendor and actually kind of illustrating or articulating the view of the future that you have about how you're going to tackle going after increasingly commoditized products in a manner in which you can actually efficiently deal with it, provide good prices, and great service to your customer base, and at the same time control your own expenses in the process of growth. Um, and so that's kind of the tactic that I use. And I think others do it as well. So I don't want to claim original thought on this, but
Mm-hmm.
I do think that there is a big sea change are going to happen in relation to how that business is dealt with, and it will only be facilitated successfully through the implementation of AI and other sort of tools that will help manage that type of volume.
That makes sense. I mean, I think what you're saying is that the companies that you look at, that you acquire and invest in, introducing technology through vendors, particularly because there's not maybe a lot of legacy debt, is maybe perhaps easier to do. Whereas, like if you're a very large established carrier, you've been around for decades, if not centuries, century plus, there's a lot of process, a lot of tooling that everyone has adopted. You might have armies of people kind of using that technology. Really hard to go and change something overnight,
Well,
right?
I think on that note, and having worked at large insurance companies in my past, what I often have told people, certainly on the advisory side of some of the work that I do, um, you go into meetings with department heads or division heads, and you have really good, successful meetings about how the technology will improve process flow, underwriting decision making, even do some predictive analytics related to sort of algorithmic processes that you can introduce into the process. And that meeting goes well, right? And then there's a discussion about the integration in the system. And the department or the division head says, well, you have to talk to, the security people.
Mhm.
That's when the conversation falls off a cliff because that's an entirely different world.
Yeah.
So the underwriters would see the value at it, but then again, they're only a cog in the wheel, and you have to kind of uh, you have to maneuver the waters inside an organization. And one particular company that I did work for in the past, they were dealing with, I think at one point they said something like 3,000 vendors, and they were trying to cut that back considerably because
Mhm.
of the vulnerability issues, the
Sure.
security issues that it encompasses with dealing with all of those different vendors, contracts, external access to systems, etc. So that is more that's that discussion has to happen more in the boardroom and be adopted as a critical like imperative that needs to be resolved, and therefore the willingness then is introduced by virtue of if the board tells you to do it, then the willingness is there. So I would say that some of the challenges that I've seen with vendors, and definitely with consultancy practices, is they're talking to the wrong people. They're talking to receptive people that like hearing what they have to say and want to do those things because they want to improve the overall work
Yep.
process, the efficacy of the underwriting, um, but they're not the key decision makers, and
Yeah.
so that causes a huge issue when you're trying to get in with large companies.
I think I mean we see that all the time, right? It's getting buy-in, getting champions that can take the ball over the finish line. Infosec might not say yes to a project, but they could have 1,000 reasons why they say no, or maybe it's not a priority or the urgency isn't there. So I think getting enough champions built internally, and doing it high enough in the org so that they could go and make things happen across departments. I absolutely agree. I mean, those are huge challenges. That's the kind of challenge that technology vendors have, navigating some of these waters. And I think when done well, it allows you to have new innovation that's introduced that's additive to the organization. But I'm curious on the security side, and obviously Europe has much more stringent regulations than what we've seen in the U.S. to date on AI. Um, what is the temperature in the room regarding the use of large language models? And what we've heard is some companies and some countries really don't like closed source models. So ones by OpenAI and others, and they prefer open source models that you have more control over. You could keep them in your walls. Um, that being said, some of the best models out of the box are closed source models by the likes of OpenAI. So I'm curious if you've seen anything on your side, with maybe a deeper read on that debate.
Yeah, I mean, maneuvering European law has never been one of my strong fortes, but I have to dip my toe in the water every once in a while. I was involved a way back when uh, in relation to the introduction of GDPR and what that would mean from a European perspective. So the European Financial Roundtable did a working committee to which I was a member of, and they were trying to talk about creating a digital sort of level playing field for European countries so as to compete properly, whilst also embracing some of the challenges. Because you not only have the individual country issues, you also have cross-border challenges. And when large-scale financial institutions operate, they operate within the European Union under sort of freedom of services or freedom of establishment perspective. So you might be, incorporated and capitalized in one country in Europe, and you have the right to sell products to all people across all geographies. So dependent upon the specific regulations, or the willingness of regulators to consider the different forms of models that exist in relation to AI, you also have to consider who regulates you and who regulates the customer, where the customers are. And I would say that, not to speak badly of regulators, but I think that they're actually, hugely challenged with trying to understand the sort of the revolutionary impact that this is going to have on the societal impact. I'm sorry, not the revolutionary impact, the societal impact that this is going to have, and more importantly, what this potentially means in relation to creating better products and services. And I don't think they're there yet, because when you ask most regulators, I think that they would, their first port of call would be to say, "You mean that open AI thing," without even really understanding that it's a broader universe than that one company.
Sure.
So again, I can't speak on behalf of all the regulatory environments in which we operate and which I've operated in my past. But I would say that generally, you have regulators that are woefully ill-equipped to deal with these emergent issues, and they're right now in the investigatory stages of trying to understand exactly what this means, without even really considering how this could have a potential seismic shift and change in the way in which insurance underwriting is done in the future. And I
I
don't
don't
think that's
envy
being bad. I think that's just the reality of being overwhelmed with all of the other oversight responsibilities that a regulator has. This is just another one, albeit it could be the most important one for the future.
I agree. I don't envy the job of regulators at all. I think the space is hard. It's moving super fast, and the consequences are pretty dramatic, of getting it wrong, right? And so I think it's going to be challenging. But I think what you're seeing is that companies are trying to figure out best practices for themselves. So as they have organizational risk, they have business risk, reputation risk, all these things about introducing technology that they don't fully understand, maybe their vulnerabilities on. So I think there is some caution. At the same time, there's excitement, optimism. I think companies are leaning it. So in some ways, that ends up being hopefully somewhat self-regulating, right? No one's going head in on large language models, deploying it willy-nilly across the organization. But at the same time, they're not waiting for regulators to go and tell them exactly what they can or cannot do, before they start experimenting. So fortunately, there's been guarded optimism around it.
Yeah, I would also say that being optimistic about the future. Going back to one of your earlier questions, there is also a demographic issue in relation to most of the large regulators across Europe, right? So you do have this divide, and the Gen Z in particular is going to be bringing in, and then Gen Alpha, sometime in the near future, is going to be going to work in those regulatory bodies, and they're going to bring a fundamental understanding of what these technologies do and how they will improve things. So therefore, one can hope that regulation will amend over time, embracing these technologies in their acceptance, broadly speaking, across all different geographies and regulated territories, by virtue of that change in demographics. So, like, just picking up on something you had talked about earlier, we talked about earlier.
Yeah. That makes a lot of sense. What about co-pilots and better knowledge management? So one of the things that we hear is that, and especially like when you consider demographics, right? You see underwriters that might be newer to the team because they're younger in their career, earlier in their career. Underwriting is such an important role, but it's complex, and the complexity in some ways increases over time. The hope is perhaps that with better knowledge management, with better co-pilots and chatbots, that underwriters might be able to more quickly ask questions and retrieve answers, and accumulate more knowledge through that conversational experience, even though they may not quite have the experience yet. Does that story have legs? Are you seeing that firsthand, or is that too much to ask?
No, no, I think there's validity in it, especially in when I talked about commoditized. So if you look at sort of a segmentation of different sort of commercial insurance and then retail insurance, I think there's huge opportunity and scale. And I think also they've adopted that a long time ago. But when you look at the different sort of segmentations across the commercial insurance arena, on the more commoditized side of the portfolio, by absolutely there can be some knowledge transfer that comes by having that type of technology engagement with individuals, and you don't need to kind of you don't need the guru at the in the corner office to actually explain how to make decisions about sort of that sort of high volume, low value business. Because in all honesty, the more people that talk in the process, the more margin that's lost because of the nature and the size of the particular accounts that we're dealing with. That said, if you're looking at more complicated risks that actually have issues that expand beyond just the risk itself, that have to have some sort of context that's associated with it. Maybe it's a discussion about issues that client has had in the past
Yeah.
related to particular um, questions that have been asked by underwriters. Maybe it's the nuances. That only comes through experience, right? So it's not that it's an unlearnable thing, but
Yeah.
I do think that that's where the knowledge transfer that can occur between individuals, because I'm still a little bit reluctant or skeptical about the soft skills that AI has to offer. The
Mhm.
chat functions, chatbots can facilitate, because there's reading people is a lot different than getting a sort of a textbook answer.
Yeah. I mean, I think the world is going to be one. I think, for example, I think chess is a great analogy where human and AI competed. AI is now better than human at chess, but marrying humans with AI is the ideal state, right? And I think the idea here is that AI can do certain things really well, help scale some of the work really well, and add a lot of value and close the gap that perhaps some of the demographic trends would otherwise leave open. But experience also matters, and there are things that models might not have full context of, and that experienced underwriters do, and they're able to add to the overall picture in the underwriting function. I think that's hugely valuable, and I think that's exactly where the story plays out in due time.
Hmm.
It's about what are the tools that will be additive to underwriters to help them move faster. I think that's kind of the big open question.
And I
Uh,
think also, insurance industry is built. The industry is built on a historical view, so looking in the past. But really, when you think about emergent risks that are occurring in the future, where data is not available, that technology that has the ability to kind of look at metadata and piece together the view on risk assessment for things that have you need foresight to do, it will be tremendously empowering to underwriters in particular, in the organizations that they work for. And that can't come from history. That can't come
mhm.
from, again, the guru in the corner office, because these are emergent risks, and therefore you need that foresight, which possibly can be found by virtue of analyzing metadata, which AI most definitely will be able to do better than a human. And
Yeah.
therefore, I think it would be an amazing opportunity, because also new products and services will emerge as a consequence of that forward looking about what the world looks like in the future. But one will see, or we'll all see.
Yeah. Yeah, I mean, I think we're in the very early stages of seeing this technology play out. I think all we've seen really is possibilities. I mean, we have seen some ROI from AI being adopted well, but most of the great AI applications in spaces like insurance to help out functions like underwriting are yet to be seen. And I think that's what makes it so fun, both from a business perspective and from a technology perspective, that we get to write the story together, knowing that it's scary and maybe uncertain in many ways, including the regulatory environment, including uncertainty around the business impact, right? But it's fun to be alive and working in on these problems together. I'm super thrilled about that. And I think it seems like you are as well, about the possibilities at least. And now it's just a matter of kind of playing that story out.
Yeah, yes, no, absolutely. I think it's an exciting time. In the end, we're here to, pay loss for insureds. We're here to actually be there in the 11th hour. And what better way to do it than to be able to do it in an efficient and transparent fashion where we can deliver high quality products at reasonable prices with superior service. And if we're able to do that, that's 90% the way there to
Mhm.
actually being there at the time of need by our insureds. Under, they have a fundamental understanding of what we do cover and what we don't cover. And the more data that exists, it is virtually impossible for individuals to do that. And so what's
Yeah.
exciting is, as a work empowerment tool, utilizing LLM and other forms of technology to improve the data processing and the decision making for underwriters is hugely impactful, and therefore you can only be optimistic about the future because it means better products for customers. And at the end of the day, that's why we are here. And so, yeah, I am optimistic, and hopefully, we'll see what the next few years have in store for us.
Well, thanks, Doug. This has been an incredible podcast. Really look forward to continuing this conversation perhaps a year or two from now, and see kind of what the aftermath looks like in the adoption of this technology.
Yeah, no, well, it was absolutely amazing for me as well. So thank you so much for the opportunity, and look forward to talking to you again in the future. Let's see if the predictions hold true.
Yes, exactly.
All right.
Uh, well, thanks, Doug. I think Kelly had to step out, but I think if we leave this call, the recording will stop and it's all edited in post production. But really
Okay.
want to thank you for joining. Apologies for the delay in scheduling this, and then also the delay in kicking off the podcast. But it
No
was a
worries.
beautiful episode. And I'm very very curious and interested in all the things you do, particularly because you're involved in investing in acquiring businesses in this space. So I think there's a lot to learn from you on this. And really glad we got connected. I think was Nicholas the person that initially put us in
Yeah,
touch. Yeah,
absolutely, absolutely.
yeah, that's great.
And I'm very intrigued. I'm working with another company right now doing some advisory work for AI, and their interesting take is they're actually doing a rating of the AI models that are being used by professional services companies and the impact that that may have on insurable risks. And so we're working through some things, and I'm throwing myself into it because I mentioned before, an insurance evangelist, and in order to
Yeah,
be that, I need to embrace these things. So
yeah,
I'm very happy that we connected, and I'm looking forward to the future and learning more from the company and the podcasts that you produce.
yeah. Absolutely. I think that's right, Doug.
All
And if you have 30 minutes to spare in the next couple of weeks, we'd love to show you more about the product and get your take, seeing where it could be added. If we are talking to underwriting teams today, commercial underwriting teams, some that we're moving forward with. So I just think that given your breadth of experience and depth of experience here, could be very valuable feedback to inform the product roadmap that we
okay,
take.
absolutely,
Yeah,
absolutely.
perfect.
All right.
Well, thanks again for the time. I know it's late there. Yeah, really appreciate this, and we'll be in touch on the follow up with the podcast and the clips that we put together. Okay. Okay. Thanks, Doug. See ya.